Hi, I'm Frankie. Welcome back to my fuck show. Today, we will talk about inflation and how it is going to affect the market in 2022. Inflation, an increase in the level of prices of the goods and services. From making the nasi lemak on your dining table become expensive to causing the cost of building a skyscraper to be overrun by billions of dollars. Inflation starts with the price increase of very basic raw material or ingredients of the finished products. In professional language, we call them commodities. In the past 2 years, the world was hit by COVID-19 virus. At the beginning of the pandemic, we didn't have vaccines. The best way to curb the spreading of the virus was to practice social distancing and ultimately a total lockdown, which caused many economies in the world to come to a standstill. But then, any country simply cannot afford to have their economies stop completely. In order to stimulate the economy, governments of the world have tried various methods to encourage people to spend, at least to keep the economic engine warm. One way to do this is by giving people cash directly, just like our budget 2022. I mean, come on, if suddenly there's a helicopter dropping money from the sky, don't care, man, take it and spend. But the problem was people were unable to come out of their homes due to the pandemic lockdowns. So on one hand, people receive extra money in their pockets. On the other hand, there's no way to spend it other than online shopping. But come on, how much can you buy online? And it's boring. Boring. In the end, this hot money found its way into the financial markets. That's when we started seeing more retail participation in the market. In the US, they experienced a crazy run on meme stocks such as GameStop and AMC. In Malaysia, remember the glove rally? Steel prices hitting limit up? The best one. Whenever companies announce a bonus issue, I also don't know what to be excited about because, to be honest, bonus issues have zero impact on the company's fundamentals. It's just taking shareholders' money and give it back to them. Left hand, right hand. Anyways, the point I want to make is that this phenomenon happened all around the world, and a large portion of the money found its way into commodities such as steel, gold, coal, aluminium, you name it. As a result of that, prices started to go up and up, higher and higher. Okay, what? Prices go up means investors can make more money. What's the fuss about? When people are out doing real activities, making real demand for goods and services, prices go up. This kind of inflation is healthy and it's welcomed by everybody. But when people are stuck at home, yet prices of goods and services went up because they use helicopter money to pump asset prices, that's not healthy way. In fact, it's dangerous. Just imagine this. Stuck at home for 2 years. Some people even lose their job during this period of time. Now the economy is about to reopen. Finally, we can go out again. But everything become much more expensive than before. What do you think? I don't know about you, but I know some of my friends are feeling miserable.
That's f***ing amazing, but okay.
Speaking of helicopter money, the US has been pumping 120 billion per month into the economy during the pandemic to keep its economy floated. Perhaps they are the biggest culprit of this hyperinflation. Anyways, the US is starting to feel the pressure on the never-ending cheap and abundant money, and now they are trying to fix it. Last week, the Federal Reserve in the US said that it will begin tapering the pace of the asset purchases later in November 2021. On a monthly basis, the reduction will see 15 billion less buying in total. 15 billion is about 12 to 13% reduction in its quantitative easing. With that kind of pace, the entire program will come to an end around mid-2022. The key to note is reduction in asset purchases. It's not even pulling back hot money in the market. What I mean is that the interest rate will remain unchanged. So if you plan to still borrow money in US dollar, the cost is still pretty cheap. As a result of that, there will be still a lot of cheap money floating around in the economy. And that will still push inflation well into next year. Now, what does inflation mean for Malaysia? If you watched my last video talking about Budget 2022, I spoke about paying attention to inflation because I believe inflation will be a major theme. In fact, it is so crucial that perhaps by predicting the inflation pattern in the next 12 months, we are able to gauge stock movement for next year. So, this is what I think going to happen next year based on available information today. As we talked about earlier, money is still cheap and abundant despite the US trying to taper their quantitative easing program. At the same time, economies are reopening again, so we are going to see both real and financial demand pushing commodity prices even higher. Malaysia is a trading economy, meaning to say we make money from buying something at a cheaper price, value add a bit to become semi-finished goods, sell them off again at a higher price. At the same time, Malaysia is blessed with plentiful natural resources, which are essentially commodities. I think you know where this is going. With the economic characteristics for a country like Malaysia, inflation is good. It means that we are still able to fetch higher prices when exporting our goods and services overseas. Well, mostly goods. In recent months, we have seen some of our commodity-related sectors such as plantation stocks and steel counters enjoy a really good rally. However, with oil prices recently hitting above $80 per barrel, the highest level since October 2014, our oil and gas sector stocks barely moved. What happened? On a global scale, the OPEC Plus meeting just concluded that they are going to take their own sweet time to increase oil supply to the market. Why not? Releasing supply so quickly is going to bash down oil prices and affect their profit. That led to the US condemning their approach, saying it is going to hurt oil importing countries. Whatever it is, keeping the oil prices up is good for Malaysia. Now, it's all eyes on Petronas to take advantage of this and increase activities on its assets, create more jobs for the oil and gas service industry, and boom!
I'm like, boom, you looking for this?
But the question is, when? According to Petronas Activity Outlook, there are quite a number of contracts already expired. So, if Petronas is planning to reap the benefit of high oil prices, the first thing it needs to do is to renew all such contracts with the relevant service providers. For that, I'm quite excited to see the oil and gas industry in 2022. So far, everything sounds great for Malaysia as a trading economy on inflation. Now, this is the tricky part. Ironically, Malaysia is also highly dependent on manufacturing. For manufacturing companies, commodities are usually their raw material, which form a large part of their cost of production. When commodity prices are inflated so much during the pandemic, and if these manufacturers are unable to pass on the cost to their customers, they earn less money. Less profit means lower share prices.
Whew. Wow.
Recently, Nestle has come out to warn the market that rising commodity food prices will be a key challenge in 2022. Apart from that, many corporations also came out with similar statements. Let's assume these manufacturers are able to pass on the extra cost to customers. Are you ready to pay higher prices when you are barely surviving now after a series of pay cuts and reduced allowance after the pandemic? Well, I'm certainly not ready for that. And if there are many people who are like me in the economy, things can be quite ugly towards mid-2022.
Prepare for trouble.
Make it double.
You may be wondering, why mid-2022? How could I be so precise? Just now, I talked about the US tapering. Once the 120 billion buying program is over, I believe the next move will be to normalize interest rates. I mean, borrowing costs cannot be forever near zero, right? When the US starts to increase interest rates, the world is going to react accordingly in order to maintain their currency stability with the US dollar. If the world doesn't react, people are going to think that holding US dollar is better because it pays more in FD. Because of that, in Malaysia, many economists are saying that Bank Negara may start normalizing the interest rates in later half of 2022, which is in line with what the US may do. At times when the government needs people to go out and spend to spur economic activities, as we have seen in the cash announced in Budget 2022, for example, all of a sudden, interest rates are adjusted higher in the second half of 2022, which is counterproductive of what the government wants us to do because people rather save instead of spending. If central bankers are really planning to go ahead with such plan, number one, inflation is still on the high side. People feel the pain to spend. And number two, interest rate is increasing. They rather save to earn interest from FD than to spend. When nobody is spending in the economy, everything starts to collapse. As a matter of fact, we may even face the risk of a possible recession. But then again, even if there's going to be a recession, we still need essential goods, especially food. If we don't eat, we die, right? So maybe by the time we should start thinking about investing in more defensive industries such as telco and FMCG companies to protect our investment capital. That's all we have for today. #FUCK.